All right, what's up, everybody? Welcome to Sunday Option Q&A. I'm your host, James Legends, here with Swinging Bull. How you doing, Swinging Bull?
Pretty good, man. Nice to see you. It's been a pretty turbulent week, but we definitely navigated the price action pretty swiftly. Had a bunch of alerts hit for targets. We're day trading every day on the trading floor. And just so you guys know, we're gonna try and be more active on the. There is a channel right above us called the trading floor, and I plan to be in there a little more often for you guys. And we're gonna do some trading there, so you can kind of see what we're doing. But what a week, and here we are on Sunday, about to start the new week. James, what do you think about this upcoming week?
Yeah, so I wanted to talk about right now the market's definitely in a critical spot. We saw those CPI numbers come out on Friday
Yep.
morning, and the market just basically took a very large pullback off of those numbers. And I wanted to talk about the reasons for that and the kind of stocks that we should be looking at right now,
Yep.
going forward throughout the next couple of months, right? So if you look at the CPI numbers, and I'm actually going to just post the picture of the CPI chart in live stream chat in the premium area. But yeah, if you take a look at those CPI numbers, you'll actually see that the two sectors that are up right now the most have to be food and energy prices, right?
It's
So
energy. Yep.
we have the food prices are up about 10% right now. And then we also have energy prices up about 34% right now. So those are the types of stocks that have been on the rise in the past couple of months, right? So let's take a look at the charts here. So we have um, oil stocks like MRO. This is Marathon Oil, right? So this is just an oil company, and as you could see over the last, over a year now, it's been just trending up and up and up as energy prices have been rising. Then we also have XOM, pretty much the same deal. It's just been trading up and up and up. So those are two examples in the oil section. And then we could also take a look at stocks like Walmart. Walmart is one of those stocks that's going to hold up in a time like this. We have the food prices rising, yes, so their prices are also going to rise, which means that people have to, either spend more money at the store or just cut back on some of the groceries that they've been getting, whatever it may be. But Walmart is one of those stocks that's going to hold up in a bearish environment. You might see it come down a little bit on bearish days, but generally it's going to hold decent support. And the reason for that is because on very red days like we had on Friday, we see stocks that are considered staple stocks that are going to be around. They're just they're just stocks that are poised for continuous growth throughout the years, and that they know that consumers are always going to have to spend money on their products, right? Everybody's always going to have to spend money on food. We can't live without food. We can't live without beverages. So those types of stocks are going to stay pretty sturdy. They may fall down a little bit on red days, but if you look at, for example, Coca-Cola on Friday, it was really only down a little bit over 0.5%, which is really not much for a day like we had on Friday, where we had the indexes dropping about 3% or more. So you have to take a look at those types of stocks, especially if you're looking for any type of long-term investments right now. I think that these types of stocks are going to be the best over the next year, just because of how strong and sturdy they are in this kind of environment. And as far as adding options and stuff like that, if you're going to add options on these and you're going to add leaps, you can do that, but you're definitely going to want to hedge them, and you're going to want to come out very far. You're going to want to come out, to something like 2024. This is SPY, so I wouldn't look at 2024 calls on SPY, but you want to buy leaps or something like that on KO, you could come out to 2023, but always get yourself a hedge with it, meaning buy to open one and sell to open another one. And this will protect you when the market does fall and the stock does have its pullback, and then you could actually purchase back your short leg and ride the long leg back up. Right. But anyway, these are just the types of stocks that we want to be looking at right now going forward, because these are the ones that, number one, have the strongest support, and number two, are just in the strongest of demand right now as well. You have anything you want to add to that, Bull?
Yeah, I was just looking at the charts you got pulled up here, and I'm really liking them a lot. Walmart. I mean, look at that gap down that happened, not too long ago. And I mean, we're at unbelievable prices for Walmart here. And, the beauty of this chart is, it's kind of looking like we might be going into a recession. I mean, I'm not kind of biased one way or another because I like to day trade the volatility. But um, if we do go into a recession, we have another interest rate hike coming up here soon. You know, where's the money? With people, companies like Walmart, they're selling basic need items. Okay, these are the companies that are going to do well. And isn't
Yep.
it interesting that we're getting a big drop on these companies now before maybe a major economic thing happens, as far as maybe possibly going into a recession? And we already know interest rates are going to continue to go up, so that's not going to help anything, you know.
Yep. They've already basically told us that the interest rates have to go up, and that's
More.
the combat of the inflation, right? They have to raise them to try to combat that. But yeah, you're right. I mean, Walmart definitely does have this gap to fill up here. How long will it take for it to actually fill this gap? Only time will tell. It's really not something that you can predict how long it could take. I know
Yeah.
we had a gap fill on Facebook from 2 years ago recently. So that's just to give you guys a general idea of how long some of these gaps on the larger stocks can take to fill, right? Like this gap doesn't have to be filled within the next month or two. This could take a whole year or even 2 years just to fill that gap. We don't know, right? But the idea of the gap is that eventually there will be part of the chart on the daily chart in between these two spaces where it's completely gapped out right now.
Yeah.
But yeah, so I mean, it's interesting. You saw Walmart drop from their earnings report right here, right? They dropped all the way down. They dropped the close at 148, and then the next day closed at 131, right? So that was a decent drop, a $17 drop on the stock, and then again the next day dropped all the way down until it hit that low at 117. It's kind of been holding that support recently, which is the reason why I'm talking about this stock. Is you could see this is holding up that decent support. I mean, on Friday this was green, when the rest of the market was pretty much just blood red. You had stock like Walmart up.
Right.
And also to actually just extend onto that really quick, I want to talk about like stocks like Apple and Amazon and Facebook and these stocks, right? Because these stocks like Apple, for example, is obviously considered a quote unquote staple stock. It's a blue chip, right? It's one of those stocks that everybody wants to have in their portfolio. It's a company that people believe in for the long term, that it's going to keep on growing and growing and growing. So why is a company like Apple not up when in a time like this, right? Because it's a stock that everybody knows. It's a company that everybody buys from. Why isn't it up? Well, the reason would be because technology is not necessarily a huge necessity to every single person in the world, right? You could have
Yep.
your iPhone 6 from years ago and still be using it, right? So if people don't have the money to spend on newer Apple products as the months go by, Apple is going to lose money, right? Because if the economy is falling and you have regular middle class families, because that's what it's all about. It's about the middle class. What are they buying, right? Because the upper class, they're always going to have money to buy things. Okay, so it's about that middle and lower class, that they have money to afford on spending on products like this, because the middle and lower class make up such a larger percentile than the upper class, financially do in America. So these types of companies are going to fall too, because people just don't have the money to spend on things like this. Apple and Amazon and Facebook. Facebook makes a lot of money through generating ad revenue, right? So people aren't really going to be buying things on Facebook if they're trying to save money and they need to save it for that gas that they're paying, more than double what they were paying a year and a half, 2 years ago. At this point, people are spending more than double what they spent on gas. They're spending a 10% rise in the grocery products that they buy. So they don't have as much money left over to buy, the next iPhone, right? Or the next
Yeah.
Android, for example.
Well, it's not something that they need,
Right.
and I think a lot of money does, things like Apple or Facebook, if you think about the products they sell and stuff like that, I think that's more consumer discretionary section, the sector. And what happens is, instead of, the consumer discretionary section actually tends to fall when the economy's doing bad, because a lot of money goes to the consumer staples. Now, the consumer staples, this is where you go get your bread and your eggs and your milk, and they're selling basic need items that they know that money's still going to flow into there. And what we see when the economy's bad, and potential, maybe we can go into a recession, what have you, a lot of money is going to flow to consumer staples. So keep your eye on that sector. And the worse that the market does, you're going to see consumer discretionary is going to start turning red. And we're already seeing that in a lot of underlying stocks, right?
Yep, I absolutely agree. And if you guys are looking at my Apple chart right now, basically this is what I see on the Apple chart, right? So this is kind of like a descending wedge here on the daily chart. I actually drew it on the 4-hour chart, right? So basically, these types of wedges generally do break to the upside, right? But it could take until it gets all the way to the bottom of the wedge to finally bounce out and start reversing from there, right? This is a wedge that's going for a reversal eventually. And the reason for that is because it's making lower highs and lower lows as it goes down, right? And then here you could see now it's starting to make that higher low. I mean, we'll see what happens in this week, if it's going to end up breaking under that support line again and coming lower, maybe coming down to that last low. But generally, it likes to stay within this triangle here. And by the time it gets to the bottom, if it does make it all the way there, that would be where you would start expecting maybe this is going to break out, retest that top line, and then maybe start reversing from there. Now, I'm not saying that we've definitely hit a bottom on Apple, right? Because this wedge would be showing that the bottom is around here, which is where it bottomed out last time. So I'm not saying that we necessarily hit a bottom on Apple, but if it was able to hold up over that 132.60 support and make it out of this wedge and start that retest and reversal, that would actually be something that I would look at, for a short-term swing, maybe over a week, maybe a week and a half, something like that, to play calls on Apple for a little while, because it is still a good company and it is still a stock that investors are definitely going to buy up as it goes down, right? Because they're looking for a discount. A 4% drop on Apple is actually a decent, can be considered a decent discount to some investors. So, this is something that people will look at for a bounce eventually. But I don't think it's necessarily going to be there yet. I was also just looking at the futures and seeing that the futures right now are down. They could potentially flip, in the morning. But the fact of the matter is that we had a pretty huge drop in the market on Friday. And the fact that the
Yeah.
futures are still going to be red right now, it's kind of like, I don't know. I think that we're going to see more downside tomorrow, honestly. So you might see companies like Apple and Amazon take a little bit more of a hit tomorrow, but we shall see, I suppose.
Yeah, I like that a lot. You just mentioned the futures. I'm actually looking it up right now. As far as where I get my futures data from, I like the pre-market CNBC data on the futures. They actually, the CNN.com gives, actually, I've noticed it's a lot better. So right now, the futures, they're actually down quite a bit. Okay. So we need to be careful this week coming up. And what we're trying to focus on this coming week is how do we make money on the overall trend, right? So if the overall trend for the, if we launch the week red, and based on the data from last week, we had 3 red days in a row to end the week last week. If we continue this trend, what we're going to be looking for is pullbacks to the upside, and then we'll be playing puts because the overall trend is selling, right? So we just have to be strategic on how we're day trading, and we can still do long positions and that kind of thing, but let's use the profits from day trading, the downside, to fund maybe some 2-year leave options or maybe some blue chip companies, that kind of thing. So we just have to be smart and I can't wait for what Monday shows us. What do you think, James?
Yeah, I mean, I think, that's the whole thing is we have to be smart about the stocks that we actually play. I think one thing that I've noticed, you know what, let me take a look. Let me just go to the SPY chart for this one, actually.
Yeah.
I know there's a lot of lines on my SPY chart right now, but we're going to, we're just going to come back here for a second. Okay, we're going to zoom in a little bit so that we can make it a little bit clearer here now, right?
There we
So
go.
the whole thing about this right now is that, okay, you know what? I'm sorry. Hold on. Let me switch it to Trading View.
Oh, there we go.
I'm gonna switch over to Trading
You know,
View.
I actually do a lot of charting on Webull, but
Yep.
Trading View has some, there's some glitches in Webull that you don't get on Trading View. I've noticed that. I like it.
Yeah, it's plotting extra trend lines when I'm not asking it to, basically.
Yeah.
Okay, so hold on. Let me just switch my screen here.
Hmm. But do you ever notice those glitches at the end of the day on Webull? Like, it's literally like right after the bell rings, there's this crazy monster candle, and it messes your charts all up. And that's why we use other platforms for the charting. You know.
All right, so now we're on Trading View on the Discord. I could also share it on the StreamYard. Just one second.
Yeah, let's do that, and I'll hook you up here. There it is.
Okay, are you able to see the chart on
Yep.
StreamYard?
Yep, we're good.
All right, great. So
Rock and roll.
basically, the reason I wanted to take a look at SPY really quick is because this is what I want to talk about. When you see these mountain climbs up, okay, you see these attempts to push it up, and then every attempt at pushing it up is met with a hard push right back down, right? This is a lot for the SPY to do here. This is going from the bottom here of 390 or 389 and coming all the way up to 393 or 392 at this point, right? So this is actually a very solid push here. Okay, when you get a push like this, that's over all that prior resistance, right? It made the mountain go over all the prior mountains. This is one here. This is another one here. We beat both of those when we went higher here. Okay, when
Yeah.
you get a push like that, that's generally going to be met by more buying pressure because it's breaking out. It's breaking that resistance point that it couldn't break before. So this is generally going to be met with more buying. Okay, it's just momentum. If it breaks that, it goes higher from there, right? But as you can see, we're seeing a lot of rejection every single time it tries to do something like that. Again, broke higher than that prior mountain, right? Broke higher, but still got rejected right back down. So, what this is telling us when we see things like this, it's telling us that there's a lot of selling that needs to be done before the market can run, like actually run and stay strong, because basically what's happening is there are block sells. Okay, there are large share quantity sells happening every single time you're getting a big push like that on the indexes. When the indexes push, the rest of the stocks push. Apple pushes, Facebook pushes, Amazon pushes. So every time that happens, those stocks are getting sold off, and then the indexes are coming right back down. And then we had a hard sell off into the end of the day, actually lower than the low of day throughout the middle of the day. Right? We had a hard push down to a lower low right at the end of the day. So that's very bearish. So we definitely most likely are going to see more downside coming on the SPY, on the market in general. And we have to be careful about the stocks that we choose to play. And we also have to be careful about the directions that we choose to play them and taking profit when it's on the table as well. Because when you see things like this, you're seeing that it's not really running, right? So we don't want to get greedy. Okay. If we buy calls off the bounce here, we don't want to get greedy because it broke resistance. We don't want to say, oh man, it can go higher and higher and higher. We want to start taking profit at that point now, right? Because we want to be able to get in and get out green. We don't want to sit in it after we've already been profitable and then let it go red within 10 minutes. 10 minutes is not a lot of time. Sometimes when you're sitting there watching the charts, watching the 1 minute chart, 10 minutes could feel like a long time because you're just watching those candles go by, but 10 minutes is really not a lot of time. and you need to be quick with your trigger finger in this type of a market when it comes to taking
Yep.
profit.
Yeah.
It's just the way of the market right now. We will and have had some of those days where we'll see it run and run and run all day long. Those days will happen. It'll happen, going up, and it'll happen in the going down direction too. But as far as day trading goes, we need to be careful about holding things for too long at this point, holding day trades, because
Yeah.
all this is showing us that there's a lot of selling pressure that needs to happen, right? And there's a lot of buying that needs to happen too. So you could get screwed up on your puts as well. So you have to be just very careful and quick to take your profits in this market. At least that's going to be my strategy. It has been my strategy for the past couple of months now. Is just like kind of just securing the profit when it's there and not really worrying about it if I don't hold to the maximum profit potential every single time, just because of the way that these things happen. And I know that it's not going to run every time, and that if I hold too long, I'm going to end up losing the money that I had on the table already.
Yeah. Absolutely. I mean, look what happened at like, I think it started around 2 p.m. and then all the way to maybe like 3 p.m. You can see that channel that formed right there on that chart you have there. And what was interesting is we were in an uptrend, but if you look how harsh that sell-off was after 3 p.m., that's not a good sign.
No, it's
Like,
not a good sign at all, because that means that at the end of the day,
yeah,
the market makers, uh, I'm sorry, I was muted on Discord. It's not a good sign at all, right? Because at the end of the day, you're seeing that the market makers, the bigger investors, you see all this volume come in at the end of the
yeah,
day. Volume is a very strong indicator that is often overlooked by many traders. You have to
yeah,
look at your volume because it's going to show you where the strength is. And when you have a
yeah.
lot of volume here in the end of the day on the sell side of things, that's just going to show you where the market is going to start ending up.
Yeah, I mean, if anyone bought at the last time it made that high in that channel that it formed, when it made that last high, I think it was right around 3 p.m. That was a total bull trap there, you know, based on look at the channel it was in and how sharp those sell-offs are. I mean, that's a bull trap, 100%. And people got trapped in calls up there because they thought, okay, it's Friday, maybe the market's going to run towards the end of the day. But look at that sell-off, so harsh,
Right.
and then
Kind
all
of
the
like,
sell-offs in between. Look how sharp down they are. It's not even consolidating. It's just like it's like a total pointed top triangle sell-off and buying pressure. It's very scary volatility action there, and you don't want to be left holding the bag there. And like you were saying, James, we got to be quick to get in and out of these things, no questions asked.
right. And especially in the way that the market is now, which I'm sure, anybody who's been trading options for the past couple of months has seen this. But for those that have really not been watching the market too much, everything is really following these indexes right now. Or rather, the indexes truly do follow the stocks themselves, right? But it's an illusion that everything's following the indexes, but it truly is the other way around, right? But in reality, you're seeing that this volatility, this is great for day trading if you're quick to get in and out, horrible for day trading if you're not. So you have to, we see this uptrend and it just breaks completely at the end of the day,
Yeah,
right? So you have to be careful about things like that. These uptrends, they don't last forever, especially on the 5 minute chart or the 1 minute chart. They don't last forever. Those are meant for intraday trading, where you're just trading a little bit, scalping that trend and getting in and getting out, because eventually they break in one or the other direction.
yeah. I mean, James, look how many day trades that have been alerted, the past week or two or even longer. I mean, if we can get 10, 20 cents per contract on these things, I mean, that's good money. In and out. Sometimes we're not even in these plays for, 5, 10 minutes. We're already out with shaved off 10, 20 cents a contract. You have multiple contracts. It adds up really quick.
Yeah, exactly. So the small wins add up, right? And that's kind of what we're going for right now. The riskier you are with the on the option side, as far as the expirations that you choose, will dictate the amount of profit that you're able to make, or the amount of loss that you take as well, when taking these types of trades, right? Because if you do an expiration that's very close, you could make a lot of money on a run like this, or you could lose a lot of money on a dump like this. Either way, or if you pick an option that's a little further out, you could be a little bit more comfortable with holding it for a little bit longer, just because of it's a less volatile moving option. It doesn't move as quickly. On a drop like this, where if you had an option that was 2 days out, you would be down probably, if you had calls, you'd be down about 30% on a drop like that. However, if you had an
Easily.
option on SPY that was 2 or 3 weeks out, maybe you'll only be down, 11% on a drop like that, right? So that's another thing that everybody should be looking into, is just kind of playing safer options right now for the day trades, just because of that volatility. Keep yourself a little bit safer, especially if you have a smaller account where you can't really, risk, 20, 30% on an option that expires 2 days from now. And, just be safer about the trades that you take and minimize the losses when they're there. Trust the technical analysis. When you have it set up and it fails, like if you bought calls here off of the bottom trend line and then it fell under, that's when you get out, right? That's when you got to
Yeah.
get out.
But James, zoom in on that.
Yep.
Right there below the trend line break. All right. So say you were hoping for a call option because you were hoping it would bounce off that trend line.
Yep. Right
What
here.
happens, instead of, okay, we get the bearish candle right after the trend line break to the downside. But look what happens. You see that green candle right there in the sandwich? That's where you're getting out.
Yes.
If that candle does not close above that trend line, you need to be stopping out right there.
Right. Exactly. Right.
It's laid
Because
out
what
for you
happens
right
is
there.
it breaks the trend line and it comes back up to try and get back into it. Usually there's a retest line. Now, sometimes when there's fear and panic mode, there's no retest. Okay. And that's when you definitely have to get out for sure of calls, if you were in calls at this point. But usually you're going to generally get a candle or two that try to make it back over the line. And then when it can't, that's your sign that, okay, it's not going up from here. Maybe I should get out and switch to puts.
Well, and like James was saying, when it breaks down below it and there is no attempt at recovery, that's when the stop loss, is really going to save you. But if you're wondering if you should stop out and you do get that little green sandwich candle, if that candle does not close above and reclaim that trend line, and that next red candle forms, you got to be stopping out, no questions asked, or you're going to get hurt.
Yep, I agree 100%. All right, well, this is also a question and answer session. So now that we've kind of gone over like most of the stuff that we wanted to talk about, we can open up the floor to any questions that anybody might have. So if you're on YouTube, feel free to comment on YouTube a question that you have. If you're in the Discord, just comment in live stream chat or open up your mic and ask your question.
Yeah, absolutely. We're
all right, and while we're waiting on some questions, I'll just talk about some other stocks that are in those fields, that are, the prices are raising in those fields. Those stocks are going to be in higher demand, right? So right now we have the energy stocks going up. So we talked about XOM, we talked about MRO. There are other ones. There's also BP. This is one that you could look at. This is not BP. I'm sorry. Just there's a lot of BPs on TradingView for some reason, but we want this one on the NYSE. Right. So, BP is one of those companies. You also have Sunrun, Sun Power, for the solar energy sector. Now, those companies in the solar industry haven't been running as hot as the oil stocks and the general, energy stocks. But these should be on our radar, definitely, because solar energy is a form of energy. And as gas prices and energy prices rise, I think that more consumers are going to move over to the solar, way of doing things too. I also used to be in the solar business, so I kind of understand how it works, especially for a homeowner. I actually have solar panels on my own home, and they do work great, right? But that's not the point. The point is that it's something that people are going to start looking into, an option that people are going to look at, as the coming months and years are upon us. So
James, looking at that chart you have pulled up right there,
Sure.
Like right when basically the most recent run up, if you look at where May is on that chart, to the right, yep, right there. That most recent run up, they got a bit of good news from the Biden administration. He passed like this big solar deal or something, and that's the most recent run up we've seen. But it was nice to see the solar, industry kind of get a bump from that because I do believe in, saving energy and, a better way to get energy and that kind of thing. So I didn't know if you realized that Biden actually just made it. I mean, this is like a federal law now, something about solar panels, but it gave a nice bump to the whole solar industry. This was like a month ago or something.
Yep. Yeah, absolutely. Yeah. When you get news like that, it'll definitely help out these types of companies. Also, we do have a couple of questions in the live stream chat right now. So we got Mr. Durden, Big Gains, and Goofy Goobers with questions. Let's start off with Mr. Durden. Let's take a look. He wants us to take a look at CTIC.
Yep, CTIC.
So it's a biotech company. It's a pharma. Let's take a look at how the chart looks here. All right, let's take a
Been
look at
trending up a little bit.
right. So you could see that this huge pump was followed by a big drop off like this, right? So there's not really a trend that we could find here, but we could find like some points of support like that. Like if it was to come back down to this 450, 480, maybe a little bit under $5 range, that could be a buy spot if it's able to bounce off of that area.
Definitely
We
could be a demand zone for sure.
yeah, that would be like one spot you could look for some demand there. You could also you can't really that's not really going to help us too much, that line, although it is valid. That would be where it tops out if it does keep going a little bit higher. I would want to look into, more of what this company does and the type of products that they push and things like that, to really give you a better answer. But as far as like an entry on a company like this, I would wait for it to come down and test this support area, especially with the way that the market is now. I don't think that this kind of a stock is just going to keep running and running, unless they come out with some kind of news about a product that they have, like FDA approval or something like that. That could send it up. But as far as just like generally looking at the stock, for an entry, I would wait for it to come back down and test around this area here, right? So like that low $5 range, or maybe just under $5.
Yeah, I mean, I like that analysis. Me personally, would you say this was a pharmaceutical company or?
Yeah.
Okay, so Mr. Durden, I know you've been with us for a while, so basically, are you already in the green? Are you maybe trying to average down because you're red? These are all important questions that we need to take in consideration here. If you're already in the green, okay, you're not even in yet. Okay, good. So you have the best opportunity here because you're not holding a bag or anything. And now we're going to look at price action to determine, maybe the best entry for you moving forward. And kind of like that trend line James drew out on that chart he's showing right now, definitely wait at least for a pullback to that trend line there. Now, I know right below it, you got that big red spike that went through the trend line. But what you also have to keep in mind is, are we forming an ascending head and shoulders? I mean, depending, if where the price action's at right now, if it pulls back to that trend line, that could be a bullish, signal, especially ascending inverse head and shoulders. What do you think, James? If it pulls back to that trend line and bounces, we could be going higher.
Yeah, if it came back down here and it bounced from there, I would say it would be good for entry at that point and just stop loss if it comes under it.
Stop loss right below the trend line.
Yeah, that would be your best bet. So you would want to wait it out for something like that to happen. Especially just like the type of market we're in right now. Just wait for the pullback, in my opinion. I mean, I think the only way this really starts blasting off more from here is if it has some kind of significant news. So yeah. That would be it. I
Could
would just
be.
wait for it to come
Yeah.
down, see if it tests here, see what happens when it does. You do have the on balance volume here. This is an indicator that I use sometimes. So you do have the on balance volume pretty much grinding at a high. So that actually is a bullish sign. And that's saying that it could go higher from here just because the volume is still balanced out here, right? You don't have it,
Yeah.
coming down even as it's hitting resistance up there. The on
Yeah.
balance volume is still going higher. So that's technically bullish on balance volume. But I still would think that it could come down from here and test this line for sure. Yeah.
Well, James, let's can we check and see how much cash they got in the bank? Because to be honest with you, and maybe this helps also, Mr. Durden, these pharmaceutical companies, biotech companies, therapeutic companies, blah blah. When they get a pop like this, depending on how much cash they have in the bank, this could be primo offering time for them, and you want to watch the downside with that. And we could easily check how much cash they have on their balance sheet, and depending on how much money they have in the bank, can determine if maybe we have a risk to the downside because they need money and they love to do offerings when the price pops, right? And yeah, James, you could probably
I'm pulling it. I'm pulling it up right now. So is my screen on the SEC website?
yeah.
Okay, perfect. Yep. So here you go. Here's your last quarterly report for CTIC. So
How
cash
much money they got?
equivalents 96,000, right? But these numbers are all in thousands except for the share amount. So whatever this number is, you add an extra 3 zeros to it. So this company actually has $96,902,000 in cash.
Gotcha.
And then they also have the liabilities, right? So we want to look at this to figure
Yeah.
out their debt to asset ratio. Okay, so you take the amount of assets that they have compared to their amount in liabilities. Let me just go all the way down to total liabilities down here.
It looks like
Okay,
they're upside down.
so you have 131 million liabilities, and then you have
And basically 100 million asset.
131
So
million in assets. So they're pretty much just 100% debt to asset right now.
okay, yeah. Which is not bad. Me personally, when I set up my scanners and stuff like that, I'm personally looking for a 1-to-1 or below asset to debt ratio, which means if the debt is more than a ratio of 1 compared to the asset, I probably wouldn't swing trade that because I want to make sure they have enough assets to cover all their debt in a doomsday scenario. At least they can pay all their debt off and maybe survive. But if they ever have a lot more debt than asset, that's a little worrisome for me. And I would mainly day trade that stock probably.
Yep. Or if you're right, you could day trade, or if you're going to wait for the swing, wait for it to come here and just have that strict stop out if it can't hold up.
Yeah,
That's pretty much it.
exactly. Like, I mean, I'm not saying, 100% if they have more debt than asset, I'm not going to swing it. But if their financials are indicating something to that nature, I'm going to have a strict stop loss. If the trend breaks, I'm out of it. Now, if the trend keeps going in my favor, of course, I'm going to try and get as much money as I can out of it. But we just have to be a little more stricter on these companies that don't really have good fundamentals, if that makes sense.
Yep. Also, Mr. Durden had one more question. He said, what site is that? It's sec.gov. Okay, so when you come,
Yes.
I'll do a quick tutorial actually of just how to find this, right? So you come to sec.gov. Okay, it's going to show you this page. You're going to come here to filings. You're going to hover over it so that it gives you the drop down menu. Okay, do not search the stock here. You will not find what you are looking for if you search it here. You want to come to filings. You want to scroll down here to company filing search, and then we want to type the ticker in here. Okay, so we type it in right here. We get our CTIC or whatever company, and then here's your filings. You do view filings. It'll scroll you down to open up the filings, and then here they all are. So if you want to find a company's cash and debt, you look at the 10Qs. Okay, 10Q is their quarterly report. These are the ones that you want to look for to look at how much they have in cash, how much they have in assets, what they have in liabilities as well. And then if you find one that says S next to it, S-8, S-3, it could be S-1, whatever the number may be. If it's an S dash, this is an offering. Okay, so you could actually take a look at the offerings here. You could scroll down and you could see what's the proposed maximum offering price per share, and then you could see how many shares can they sell at that proposed maximum offering price, right? So this is saying they could sell 6 million shares at a maximum price of 246. It's not saying that they can't sell it at $2 though, right? But they could sell it at 246 or lower because that's your maximum price. So this is a good way of seeing, if a company is going to do an offering. Generally, when a company does an offering, they don't have a lot of cash on hand. They need money. Their stock just rose because of news, whatever it may be. And then they do an offering and they drop 6 million shares on your head and they make the stock go down from there because of the offering price is so low. So just keep an eye out for that type of stuff too when you're looking at the filings. All right, so now let's move over to what Big Gains Hunter asked me. He said, ADBE, Adobe, thoughts, earnings this week feel like there is some profit to be made between IV increasing and if it downtrends or uptrends into the earnings themselves. Yep. So Adobe, right? So we got it all the way down here at 393 from a high of almost $700 at one point. So it has pulled back pretty significantly since that high back in like October, November. That was when most of these stocks were at their highest point, was in October and November of 2021. And since then, most of them have pulled back between 30 and even 90%. Some stocks have pulled back since then. So we have it all the way down here. As far as which way Adobe is going to go for earnings, man, it could go up, it could go down. With the way that the market is right now, I would be more bearish on something like Adobe, over being bullish. You said it's downtrends into the earnings. Right now it definitely is downtrending on the daily chart, but most stocks are downtrending right now, right? You're going to hit that resistance each time it comes up to the line. As far as like the IV increasing on the options, I think that's definitely possible. I don't actually know the exact day that Adobe is reporting earnings. If you know which day it is this week, let me know. But as far as like the IV increasing into the earnings, I would say that's, pretty much a no-brainer. Most of the time, IV is going to increase when going into earnings. So if you picked an option that you liked here, and the stock moved in that general direction, it doesn't have to move too hard in that general direction, right? But you'll get that IV increase. However, you're not going to make, and I know you already know this, Big Gains Hunter, but just for everybody else, like you're not going to make money, just off of the IV increase alone. You still have to be like pretty much right about the direction that it's going to go. So don't think that you can just buy options before earnings and just make money on them because the implied volatility is going up. That's definitely not the case. You still have to be smart about your entries and be smart about the direction that you think the stock is going and stuff like that. But you can definitely make money on implied volatility as well.
Yeah, James, just to clarify, Adobe reports earnings on Thursday, June 16th. So this Thursday.
Yep. So they got it on Thursday. Yeah. That's definitely one that I'll be watching. I mean, I'm probably not going to play it through the earnings itself. I don't think I'm going to really.
We like day trading it after the earnings, don't we?
Yeah, I like that more, especially right now. There was a time when it was really like it was awesome. It was great getting into these stocks before they reported earnings. It was a fun time. We made a lot of money on lottos. But right now it's really not that. It's just not an appropriate way of trading options right now, in my opinion. Like buying options before earnings right now is such a crapshoot. It's not even funny.
Yeah.
I mean, you could buy puts and it could tank. Yes, that you could still make money on the lottos. Okay, don't get me wrong, but the reason that I say I don't really like it right now is just because so many stocks are waiting until they open up when the market opens for it to actually move, and what that ends up doing is it completely crushes the options that you bought the day before.
James, also a lot of times we'll see big money making the big moves or transfer money in one direction or the other based on earnings. They'll do it obviously in extended hours at inopportune times. I mean, I've seen spikes at 4:01 a.m. Eastern or 7:59 p.m. Eastern, and like they're making these huge moves and they're trying to catch us off guard is what they're doing. And what happens is if the move's already done before the market opens, the move we see during market open is not literally, the intentional move. But you just have to be able to read through all this stuff. And I mean, don't you agree? Like they're throwing a lot of traps out there, and we're in a very volatile market, and that's why they're doing it.
Tons of traps. That's exactly what I was explaining before with the SPY, right? We're getting those mountains up that are breaking resistance and then immediately getting shot right back down after they're breaking resistance.
Yep.
Those are all bull traps. That chart that I showed you guys before on SPY, that was like 3 bull traps in a row, because each time it breaks that resistance, most traders are going to think there's going to be momentum from there. That's where a lot of like experienced and professional day traders will take their entry when it breaks resistance. They're not going to buy it before it breaks it because it's an unsure trade at that point. But when it finally breaks, that's your confirmation. That's where you get your momentum, and that's where everybody's entering the calls once it breaks. But then the thing is that it's breaking. You're having that minute or two where everybody's getting into the calls, and then it's getting shot right back down. So these are all those bull traps that are happening right now. So, what was the whole? What did you say before this about the traps?
No, I was just saying that big money is setting up these traps, and like if we were talking about earnings, and Adobe has earnings on Thursday, so how can we play that? But what you have to keep your eye on is sometimes the big money will make their move before anyone realizes it, and people still think it's going to move in a certain direction, but really the move's already made, and now they're trapping people, maybe through another hedge fund, and people are getting trapped, and it's just a big, that's why we're doing a lot of J trading right now, because we don't really have a sense of direction with anything. And even if we think about like the tech sector, that's been getting hammered all year. Everyone's waiting for a bottom on that and this and that. And every time someone thinks there's a bottom, it gets hammered more. And I think it has a lot to do with patience and market sentiment. And, what we're doing in the premium section every week is we know we're pretty much in a bear market. So instead of getting caught in a bull trap, we're going to wait for a spike, and then we're going to be shorting things, whether through equity or a put option. Because the overall trend is we're kind of, the trend is your friend until it's not anymore. And if you play the price action correctly, and of course we can still make money on calls, because we already know through Fibonacci retracements and stuff like that, that when we do get a sell-off, of course we can make some money on a little bounce. But I think there's more momentum to the downside right now. And look at how much money, all the alerts that have been hitting in the past several months, basically all 2022, right? I mean, if I look at my order book from the past 6 months and compare maybe the money that we've made on calls and puts and compare them to, I mean, I think we're definitely making a lot more money on the downside. What do you think?
Yeah, I think there's more money to be made on the downside. We just have to play the trends that are happening right now, right? So we just kind of have to, everybody has to get it out of their mind, basically, that we're going to have a big run, that we're going to have this big bounce from the bottom every time. It's just, it used to happen like that, but it's not the market. It's just not the way that the market is anymore. And I think that instead of trying to play the bounces and get the runs, we have to instead short the runs, short those little runs that are
the
coming.
Pullbacks, and we shorted on the way down.
Yeah, absolutely. So that's like one of the main things right now. Now, obviously, we could still play calls. Okay, I'm not saying don't buy calls. Please don't think I'm saying that. We could still play call day trades. We could still do all of that. But I'm saying that for like the more solid, trend plays, right? The trend is your friend. We want to play down right now. That's just going to be how it is for a little while, and that's totally fine. We could definitely still make money. Also, I just wanted to answer Rozodic's question, and also Goofy Goobers. We're going to answer that question too about Bulls Leaps in a sec. But Rozodic, he said, can you use a put debit spread to take advantage of the implied volatility increase run up before earnings? So yeah, basically like you can use the put debit spreads. It's basically the same thing as buying the single leg option as far as like playing the implied volatility goes, because you're buying it. So you're wanting the implied volatility on the one that you're buying to go up. Also, the one that you sold, the implied volatility is also going to go up. So it's basically just a little bit less risky way to play. It costs a little bit less, but it's essentially the same concept. And then we also had Big Gains saying, do you think we eventually get back to a normal market 2 years from now? Probably. So, like, as far as getting back to a bull market, anybody's guess is as good as mine as to when that's going to happen. But yes, I personally believe that it's not going to happen the way that we picture a bull market to be until we get closer to the next election. That's truly what I'm saying. And I'm not saying that because of any type of political views I have or whatever. I'm honestly just saying that because that's going to be, when there's going to be, a possible turning point, right? We're going to see a lot of events leading up to that. Okay.
Well, we got the midterms coming up in November, so that's going to be definitely going to affect the markets.
Yeah, that's definitely gonna affect the market, right? That's one, that'll definitely we'll see some kind of reaction from whoever the whatever the outcome of that will be.
Yep.
And then the presidential election is obviously your biggest one. But that's
2024.
Yep, that's a little farther away. But we will eventually get back to a normal market, man. It's not going to be like this forever. You have to think about all of these people in March of 2020 or even 2008. Let's go.
Yeah.
You know what? Let's screw March, screw COVID, screw March 2020. Let's talk about 2008. Okay, this was when the housing crisis, right? Obama was in office. We had the whole market dumping. Everything was it was down. Okay, and everybody thought that was the end. This is it. The market is not coming back up. We had so many people 401ks get destroyed.
Oh,
They
yeah.
sold out. They didn't.
We ended up making all new highs.
And obviously since then, if you had held from 2008 until 4 years later, 10 years later, you would have obviously been in profits at this point, right? So we have to look at it from a long-term perspective like that. Yes, the market generally likes to go up. In the long term, that's what it does. It's in an uptrend since inception, so it will definitely get back, to normal, right? Whatever normal is, and it'll get back to a bull market eventually. It's just not gonna. I just don't think it's going to happen anytime soon.
Yeah, I mean, me and Lee, one of the other shot callers in PB, we were just talking about this the other day, and I've heard, from here and there over the past year or two, some people felt like they missed out on the post-COVID run because the obviously the market tanked when COVID hit March of 2020, and a lot of people doubled their money within a year or year and a half, what have you, and but some people missed out, and now they have the education and stuff like that. So this actually, the levels we're seeing, some of these stocks are back to COVID levels, and a lot of them are below COVID levels. But what I'm trying to say is this is the second chance. If you missed out on the post-COVID run, well, the levels we're at right now, we could definitely take advantage of this, and we just need to allocate properly. We're not YOLOing into biotech companies and stuff. Let's follow the trend. Let's figure out what the market sentiment in general is, and it's also a great opportunity. A lot of these blue chip stocks are at COVID levels. Well, maybe we start buying in here and there on some of those, and we just have to allocate our money properly. And in the next 3 to 5 years, maybe sooner, we're going to be sitting very good if you allocate properly, and still keep a day trading account, but definitely have a different account where you can slowly start buying some of these great companies, because you're going to regret it. You're going to miss out on the second run that's we're about to have. So
Right. Right. It's just that we have to understand that this run, it's not going to be as quick as with March.
Right.
After that dump, it's just not going to be like that. This is a little bit of a different situation that we're in right now. When
It's
that
going to be a
happened,
slow builder for me.
right, exactly. Yeah. When COVID happened and all of that, and we started getting the lockdowns and everything, and businesses shutting down, and it looked like it was the end of the world. Okay. So we
Yeah.
had very, very fast drop. Everybody was panic selling, and then we had a monster rally for the next
Monster.
like 2 years, almost 2 years straight. We had a monster
Yep.
rally. The market would not go down. Um,
Yep.
but it's not going to be like that right now, just because it's a little bit different now. Also, the whole thing was that American families were getting stimuluses, they were getting unemployment, they were getting this, they were getting that, and the third, they were getting all this money, supplemented to them, which put money into back into the economy. People had
A lot
money
of the
to spend.
stimulus too.
Yeah, it was a lot of stimuluses. People had money to spend. Everybody was
Yep.
going online, buying everything that they could buy online because they were just bored. I was one of them. I spent a lot of money during that time too. I was super bored. I went online. I bought all this stuff.
Yeah.
So that's just the type. That's just what was going on back then. But now, this situation that we're in now is like, we have inflation. The prices of everything are rising. People don't have money. There's no stimulus. Nobody's getting any
Yeah.
relief. Okay, so this is a worse situation than COVID, believe it or not. So
Well,
it's not going to be as big of as fast of a bounce back.
yeah. So to kind of elaborate on that a little bit, and we were around when COVID hit. We were trading before that as well, but I think the main difference is when COVID hit, the stimulus money coming in propped up the economy. And what's happening now is the stimulus game. It's over. They're not sending anyone checks anymore. Now I know there still are some maybe some credits you could get here and there for certain things, but the days of the government mailing the general public cash money checks that they can go cash at a check cashing place, those days are over. And if you think about the amount of money they gave out during the stimulus, I mean, wasn't it like $1 trillion or something? And now that's gone. Now
And the
things
thing
are
is,
kind of
that's all
unfolding.
gone, and
Things are unfolding without the stimulus, and we have to deal with it.
we're seeing the repercussions of that too, because
Yes.
everybody got free money, but now a year or two later,
It's
we're
gone.
paying for it. We're paying for it with higher prices
Yeah.
and everything at this point now.
Yep.
So these are the repercussions of the government handing everybody money.
Yeah.
Prices go up, things start inflation. We have interest rates rising, inflation rising. This is just what starts to happen now.
Yeah.
Mr. SLP just posted right here. Food prices have been on the rise in the past few months, and export bans have followed. Rice could be
Right.
next in line. The United Nations Food and Agricultural Organization Food Price Index already shows international rice prices creeping up for the fifth straight month to reach a 12-month high. So that's rice, guys. That's
But
rice.
if you think about it in the big picture, rice is, that a lot of the global population depend on rice. Whether you're, living in the U.S., going to McDonald's, getting a double cheeseburger, you have to think of the bigger picture. And rice is, that's a huge food supply for the globe. And a lot of people eat rice. It's a big deal. So, and what was it? The CPI numbers just came out. It was like over 8%. What was it? 8.2%. We haven't seen these types of inflation numbers in 40 years. We literally just hit a 40-year high on inflation. So, I mean, we have to keep things in perspective here. I don't think there's a quick fix to any of this. Personally, I think mortgage interest rates, I'd say by the end of 2023, we're going to be 7-8%. Now that seems high for a lot of the younger generation, but historically that's actually not really high. But I can definitely see mortgage interest rates going up to cool spending in certain areas. And I think this thing has just started because of, like you were saying, the past couple of years, all the money that was just given out and printed. We're definitely going to be paying for this for the next year or two. I don't want to say it's going to go on forever. But we definitely have another year or two where I think the federal government needs to figure out how to fix this. And depending on the decisions that they make, it could send us into a recession. There's a lot of ripple effects that are going to affect, the middle class, and we can go on about politics, but I won't do this on this channel. But I think we have a bumpy road ahead, and I definitely think there's a way out of it, but it's not going to be easy.
All right. Well, that's 9 o'clock. I know Orange Slice, you have a question there. Yeah, you know what? Go ahead, unmute. What's up? What can I help you with?
Hey, James.
Hey, what's up?
Can you hear me?
Yep.
So yeah, I just finished PBU. I've only been trading options for I don't know, a month or something. I've been paying attention to the market a couple of years since COVID. So I'm still getting used to Webull and the order types and all these traps out there, like playing the 1 minute and 5 minute trend. So like I got stuck out of some orders and stuck in some orders with selecting which limit type or which I think I've kind of found a stride. I guess I just lately I've been buying with the limit type set on ask and selling with the limit type set on bid, because some of my market orders were too volatile to execute, and then 45 minutes later, after I change, cancel order or modify order, get it in, then I'm under I'm in a bad, I'm underwater 10% already or something like that. So I guess I was hoping you could comment about that, because I remember you putting some explanations about stop losses, and then how sometimes on the shorter time frames you don't, like, you'll have a mental stop loss, where you'll manually execute instead of having an automatic one.
Yep. So number one, so with the stop losses, you're talking about options, right?
Yes.
Okay. So yeah, so with the stop losses on options, basically when you set a stop price, the order isn't going to be triggered until the ask price gets down to the stop price. Okay, so like, for example, you have a stop at 120. So it's not going to trigger the order until the ask price of the contract comes down to 120. So when you do a stop limit order, what I generally do on that is, if I'm going to set a stop limit, I'm going to put my stop price, and then I'm going to put my limit price maybe 5 cents under whatever my stop price is, so that just in case there's no bid just under my stop price, like for example, if I put stop 120, limit 119, I might not get filled because the next bid on the could be 117, right? And then the contract kind of falls out on you, and it doesn't stop you out because your limit was 119 and now you're down.
Out by a penny.
Yeah, exactly. Yep. So that's number one with the stop losses. So also about that, right? So on contracts that have wide spreads, like if it has like a 5 or 10% spread, like a $1 bid and a 120 ask, for those the stop orders aren't going to work so good. So for those, you're definitely going to want to use like more of a mental stop, not a stop trigger, because it's most likely not going to fill you on the bid, unless you kind of get lucky. So that's why you kind of want to have a mental one on those and watch it as it comes down. And then if it comes to a point where you need to get out, then you kind of just put in the limit order for like the mid price, something like that. Like if it's a $1 bid and a 120 ask, put in a sell for 110, something like that. And then also, like if you're trading like SPY or Apple or one of these stocks where the bid and ask is strong. Say again?
Like I've been playing some of the shot caller calls.
Yep.
Like when I can, get it before it already runs or whatever. Try not to chase and whatever. So I've been watching the SPY. Like there's only a couple days a week where I'll get a chance to be in the right mindset and sit down and watch the charts and whatnot. So like I'll be watching the SPY, and then if I see if I see an entry, then like sometimes if I had a limit, I'm not really sure what I'm trying to ask here. I guess like sometimes I see the bid ask spread, like I'll get in and then I'm fighting trying to overcome the spread.
Yeah, James, I'd like to comment on that.
Yeah, go for it.
Yeah, orange slice. If the spread is wide, you're going to have a tough time with the stops, 100%. So if you're using stop losses on a tight spread, it's going to be a lot easier to manage. If the spread is wide, those stops are not going to work. And you're going to notice, because of how wide the spread is, literally the price will go below your stop and it won't even hit. But that's because there's not enough buyers and sellers to tighten the spread to fill your stop order. Does that make sense?
Yeah, I mean that's what I've been seeing. So that's what I'm.
Yeah.
Well, also,
if it's a wide spread, you're going to have a little bit of hard time day trading that.
Yeah, but also just as far as like selling it, and being able to get out with a profit before it comes back down. If you're trading a stock like Apple or SPY or something that doesn't have a wide bid and ask spread like that, like for example, okay, a stock that you don't want to do this on is Roblox, okay, because Roblox has 5 to 10% spreads on the contracts, whereas SPY has not even close to that. So what you can do on SPY and Apple and stuff like that is you could just hit market sell when you want to sell. I actually do that all the time. Like if I'm holding calls and there's a huge green bar, I hit the market sell into the buying pressure. And I love doing that. I love when I get to do that because I'm literally selling into it as the FOMO is arising, basically.
Yeah,
right?
James, when I'm day trading a tight spread, that's all I use is market orders.
Yeah.
That's what I've been practicing with, and
get
then
in and out quick.
That's what I'm trying to do. And I was practicing. I got messed up on a 0 day because I had it set on market and I was trying to sell. And then Webull was like, "There's too much volatility. You have to do, a limit." So then, when I'm, my profits are melting away, and I'm trying to change my order type.
It should only be that you're not able to market buy, but you should be able to market sell, unless you're broke. Is it telling you can't market sell too?
I can't remember if it was a buy or sell. I just remember it was a 0 day, and there was too much.
Well, and James,
actually, hold on. Definitely, don't never market buy a same day. Never do
James,
that.
I was just gonna say those 0 day to expiration there's kind of different rules to that with the 0 day, and the brokers are different with that.
Yeah.
So with my entries and exits, if the bid ask isn't ridiculously wide, I just been I never seen this before, but Webull lets me set my limit and it tracks the bid ask price. So I've been setting my limit. What is it? I've been setting my limit buy at the ask. If I see the trend start to take off, and I'm just watching the trend, I'm not really paying attention, to the. I'm obviously looking at my entry and exit, but what happens in the medium, I'm just watching the trend, and I'm buy with the limit type at the ask price. Just to guarantee execution, and then trying to sell at the bid price, which I think is the same way of it's forcing it to market as a market type order.
Yeah. So when you do a limit at the ask, you're just going to get filled immediately as long as the ask's still there once you confirm the order, and so you can definitely do that to buy the options. That's fine. Especially for the stuff where it's momentum, I would say you generally want to do that because if you don't, you might miss it. So that's,
right.
You do want to do limit at the ask if you're going to buy the option most of the time, unless you're trying to try to catch a better price and you want to put the bid in or whatever. But yeah, the limit on the ask to buy it is okay. I just say don't market buy, which it's not going to let you do anyway right now, but just don't market buy. Definitely not same days, because if you hit market buy like on a call and it just happens to be that the big green bar comes just as you confirm your order, right? So you don't want that kind of stuff to happen. So yeah, but the limit at the ask is fine.
Something else I noticed, James, and I helped a few people with. I'm sorry to interrupt, but I'm not too sure if you hit on this. I apologize if you did, but I helped a few people talking about what you're talking about as far as your limits and your stop losses. There's a lot of people that set stop losses, and they try to sell with a limit sell, and they won't override each other. Like you have to get rid of your stop loss before you put your limit order in there. Does that make sense?
Yeah, you have to get rid of one order to have the other order. Yeah.
Sometimes at 20 to 30 seconds, you can lose 10, 20% profit on a volatile.
Yeah, facts, and that's actually exactly why I personally don't set an automatic stop loss until I'm already in profits, and then at that point, if I take some off, I put my stop loss on, whatever, but I'm not going to set my stop loss until that point, because for me, I'd rather watch the chart and mentally stop out when I need to, or be able to take the profit on a run in the direction that I want, be able to do it fast. So
that's what I do. I keep a second window open. So then if I do a stop loss, I know I can't do limit sell, I just keep raising my stop loss. Literally just keep adjusting it.
Yeah.
You get that's the only way, because if you try to do a limit sell, I've seen people say, I lost, but I couldn't sell. What did I do wrong? I'm like, you locked yourself out. You did the wrong trade.
Yeah.
You're trying to get
that's a good point, Tag Man.
Yep.
Yes.
Hey, James, it's been about an hour and 15 minutes. Let's go ahead and end the recording for YouTube. And if people want to hang out, we can still do a Q&A after that.
Yep.
So
we could end it on YouTube. All right. So yeah, thank you everybody for watching on YouTube, and we'll see you next Sunday.
Absolutely. See you guys next week.
All right.